accepting our invitation. The meeting today at the Central Bank Board is going to be presented by Artak Manukyan, a member of the board. The substance to be delivered by the Monetary Policy Department at Vazgen Pogosyan, and we're also hosting Manukyan, same department, macroeconomic policy specialist. After the presentation, supposedly we're going to start a Q&A. Well, to be fair to everyone, question per each, and then if there's any time left, we'll continue. Thank you. Once again. So, just a reminder, I should say, the board yesterday signifying A-type risk emanating management needs decides to leave the refinancing interest unchanged and refinancing rate unchanged, and I'm going to bring some analysis for you to understand, like the ongoing working analysis, where the economy is, which are the main locomotives, etc. Questions for the end as far as I can get. Okay, to start with the foreign sector, as we usually do. Well, I should say several groups of uncertainties that continue persistently impacting the global economy or the US economy specifically. This is the economic policies related uncertainties in the United States, quite persistent in this regard, and the primary and apparently the bigger impact is the trade policy related uncertainty in the United States. So, to look at the point, as we have conversed previously, we should try to understand the environment in which it operates, because it's very important to understand what type of impact it's going to have on the economy and where the economy is currently, the position thereof. Otherwise, economic growth in the second quarter, plummeting the first quarter and recovering in the second, as it could have been expected, like after some shifts, tariff-related uncertainties, and was somewhere about 3. Now, for some ongoing estimates, should stay with about 3 for the third quarter, with some ongoing estimates very similar to one another. So I'm trying to say that the trade policy kind of having cross impact on the inflation, and if you're looking at the growth of the prices, though effective tariffs have grown in the United States, but still there is a separate group of products where those tariffs have already been reflected, like in recent months, like toys, for example, tools, cars, and home appliances, recently visible, but essentially not fully absorbed by the economy of those markets. And we're just trying to understand how long that impact is going to be. I mean, in terms of the growth of the tariffs, which will also depend upon the demand and the environment of demand and all the developments taking place around it. Inflation has been accelerated. Well, these were the monthly acceleration rates, as we showed, and then year after year there's been some acceleration coming closer to 3%, whereas for the products with more stable prices, this is more or less reasonable. There has been some acceleration there as well, like 3 to 4%. The next significant source of uncertainties in terms of economic policies is the migration policy. In the United States, as you may have heard already, there's been a lot of change here. It's much stricter now, and you can see the border crossings and the arrests happening on the green border. The migration policy has been very strict recently, and the impact, well, could have been in form of a cross influence on prices, upwards, specifically price related. We can see that a little. Like if you pay attention to the lower left side, these are the salaries which are decreasing, but there's a separate group of salaries, like in entertainment and hospitality specifically, or certain types of services. We can see some acceleration there compared to all the other general trends. But there is another very important circumstance we should converse here, is that recently we've been seeing the slowdown of the labor market, significant weakening, and the impacts therefrom. On the right side, pay attention. This is specifically the number of the newly created workplaces dropping quite abruptly, and this has also been revised downwards, and they are at a quite low level compared to the previous years. So all of those on this side, meaning some weakening in the demand, could have concealed the migration policy strictening effects or consequences to a certain extent. Like if the level of strictness on the labor market grows a little, maybe the impact of the migration policy is definitely more visible in the market. Next is the uncertainty with the fiscal policy, and specifically given the OBBBA. And there are a couple of risks here. Definitely more incentivizing envelope envisaged for the next year. Those dotted gray lines, the new law, in the blue line, I mean on the left side, this deficit in GDP for the coming 10 years, and the red dots is the following. How much would the deficit be if certain expenses here under this law become permanent, like envisaged up to 2028, 2029, if they are permanent? So this might significantly impact the trajectory of the American debt, push it upwards. So this is not just short-term or medium-term demand we're looking at, but also in the longer term, and more neutral interests, longer interests, risk-wise, I mean, in terms of the growth of the economy. So this is the impact on the longer rates that might also have its influence on the developing countries, including Armenia. Hence, to conclude with the American economy, the Fed or FED dilemma, well, they're going to have a meeting today, and in fact trying to overcome that dilemma for tomorrow. But the dilemma is, on the one hand, they see the weakening, noticeably weakening labor market, but still high inflation on the other hand, and specifically more significant growth of prices on the part of services. Just acceleration-wise, at least in the short term, with the impact of the tariffs, there might be other risks popping up. So it is in the framework of this dilemma where the FED is going to make a decision. So the markets, specifically on the background of a weakening labor market, have significantly reduced their expectations for the medium-term interests. Like, they have definitely reduced their expectations from the FED, and currently they think that with the new decision they will also reduce the interests of the FOMC specifically, and by next year fall it's going to go down up to 3%. For the Eurozone, once again, the short-term effects that persisted in the first quarter, specifically export towards the United States, are now lifted, neutral more or less, and once again going down towards quite a low level of economic growth, which once again means that there is low demand environment in the Eurozone, and the structural problems that they have been exposed to continuously for the last several years, especially with the processing industry and related sectors, persist. And on the other hand, though, the inflation is quite close to the target level, like 2%, for example. It is mostly because of the low inflation or low price growth for the industrial products, whereas the services are still high in price. And this is the dilemma of the European Central Bank, because on the one hand, in the industrial branches, there are still a lot of structural issues. On the other, the issue of inflation has not yet been fully tackled, and they have recently been communicating that at that level the interest rates would still remain. In fact, if we consider China as just a large economy, the situation is very similar. Close to the economy in the Eurozone, meaning weak inner demand and issues in different branches, specifically construction. As for the Russian economy, once again, economic growth continues slowing down, and if in 2023-24 the economy comes to a normal shape, meaning coming back to some normal rates, that weakening means, it's everywhere, in Russia specifically, in all branches, services, industry, trade, everywhere. Everything's going down, but on the other hand, of course, the conflict, and if it continues, the labor market is full of uncertainties, and there are quite strict conditions there. Now, in fact, inflation impact is quite strong in Russia upon the economy, and in this situation, though their inflation is still high, comprising in the annual context, and the estimates, expectations are also very high. However, recently, given the very strict monetary policy in Russia, which gained strength beginning of this year, even there, for the seasons, the inflation has come close to the target levels. So in this situation, the Russian central bank dropped 1%. As for the commodity markets, situation slightly different with petroleum products, and for the part of the FAO, meaning food and agriculture, signals on the petroleum market, oil market, are closer to, prompting reduction in prices, and this is specifically based on the data of the International Energy Agency. Some forecasts there, the gray curve, and this is mostly based on the point that oil exporter countries continuously increase the quantity exported. However, the global demand of oil drops down. But of course, whether it's upwards or downwards, there are certain risks with this scenario. As for upwards, it depends on supply from Russia, disruption of certain supply chains because of the sanctions, or sanctions upon partner states for Russian Federation, maybe the probability of sanctions restraining some of the partner states, general tension in the geopolitics, and downward risks, specifically faster inflation or, on the contrary, slower economic growth, slower than estimated in global averages, for example. As for food and agriculture, essentially, there was some growth in the last several months pertaining to certain separate products like oils, for example, and generally the basket of food products has grown 7%, meaning it's about 7% in general globally, and that's one of the most important factors stating that our inflation, in fact, has taken it higher, but this mostly depends on separate products, separate categories. In the larger countries producing those, the weather is changing, and that change of weather, change of climate, might contribute to certain upwards, downwards. Okay, so for the foreign situation, in a nutshell, the main message is here. It is the following. We can observe global demand slowing down, and the risks of further slowing down persist, quite dominating. And meanwhile, in certain economies like the US, that comes because of the inflation rates acceleration risks. So as per the persistent growth, persistent inflation, it's not yet been overcome, remains on the higher caps. So this means that in the developed countries, or in the economies that might be of more interest for us, central banks may reduce those rates gradually, incrementally, or at least leave them at the same level. I mean, the monetary policy. Now, for Armenia, well, for the risks, we can first of all see that the profitability of foreign currency bonds has dropped, but there are some very important factors behind that reduction. First is the general trend in the developing and developed countries, and the other is intrinsic to the Armenian economy. So essentially, on the 8th of August, the peace agreement initialed in the United States comes with certain impact on the market as well. Here on the chart on the right, we have presented the Eurobond service spreads without, these are the spreads for the non-risk-based situation, and kind of distributed it for a larger region, Eastern Europe and some neighboring states. So we're trying to understand that in this reduction of the risk spreads, there are also general development trends persisting everywhere. But as for the rest, the Armenian or Armenia-related spreads have dropped more than for the others, which may be the consequence of the process moving us towards peace. However, we have to say that there are risks spreading in two directions from here, but this is a good news, obviously. So, moving towards final peace, longer lasting peace, we'll definitely be seeing more economic impact. As for the economic growth, we can see in the last several quarters there's been some acceleration in growth, and given the outcomes of the second quarter comprising about 6%. However, there is an important issue to be taken into account. When you compare the economic growth to the indicator of economic activity, which is the red curve of the left chart, then in the last quarter, that disruption grew, in fact. Whereas we could have expected the opposite. And this is what I mean. Pay attention to the period of 2023-24, when the economic activity was much higher, but growth dropping. That's specifically re-exporting playing a role here. Those branches would record growth where the share of the added value was smaller. So economic activity indicator was high, but the contribution to the economy was small. And we, of course, may expect the mirroring situation in this region, meaning from the economic activity, we could have expected higher economic growth, but the growth is not higher. The activity is 8.1. So even if we filter out the re-exporting impact from there, the activity could even be higher than 8. However, possible mistakes in this data played a role. Interpretation-wise, this is a significant deviation, because from the first to the second quarter, there are differences among branches, like the financial services branch, for example, 3.1 growth, meaning contribution to the economic growth, to that 5.9, which is quite significant. It's huge, I should say. Definitely overestimated, whereas in the second quarter, 0.7, which is an underestimate, I should say. And there is another important point I'd like to say here. In fact, this 5.9 growth is the economic growth that also embraces the indirect taxes. Right there in the upper right side. So that's 1.5% contribution to that 5.9 from taxes. If we remove that 1.5, because there are no taxes in the economic activity, no indirect taxes, meaning that difference grows. I mean, the difference between the economic activity and economic growth. So, to follow the dynamics in July, meaning after the second quarter, the economic activity has become, in fact, faster, has been growing faster, coming close to 9%, which is due to certain contributing factors. For example, the processing industry is also here, but one of the main factors in acceleration of growth is the acceleration of branches moving towards extending the demand, meaning services and construction. If you look at construction here on the left side chart specifically, I can do even a historical comparison. So currently the construction growth is at a historical high level with 22% growth specifically. We had the chance to discuss this, and we also discussed the risks in the branch. Meaning on that part we have some overheating risks and needed also some adjustment of prices for the real estate, and this could have contributed to changes in the general demand and also the sentiment, weakening the demand environment. However, currently we can see that the process of adjustment is currently happening. I mean, you can clearly see the real estate prices going down in Yerevan to a certain extent, but of course it's still in its natural increment, following that natural adjustment. On the other hand, services that are the next larger contributor to the economic growth. I should say first contributor to the economic growth. Still here. So if you look at the structure, the biggest contributors are financial services, IT. I'm going to come back to the IT a little later. But when you look at the breakdown of the services and the growth increment, then you will see that separate branches moving with extension of demand could have had larger contribution or contributed to the acceleration of growth specifically. For example, if you pay attention to the left side, culture and entertainment. In July, the growth was 2.8 and 2.8 in multi-annual, but from 0.3 it grew to 2.8. So if you break it down by month, that's quite a leap. And the other branches too, when you pay attention to accommodation and food and professional services, administrative, etc. So you will definitely witness significant growth as well. And a little later we're going to be discussing the factors of growth, trying to understand what has significantly contributed to this. And here again, the financial sector remains the biggest contributor, coming close to about 15%, and the IT sector is a big factor with significant growth, and one of the largest contributors to the economic growth, with about 20% of growth, from where 6 to 7 is share of GDP. So, as for the IT, it's a slightly different picture, because if you look at the medium-term perspective, then the issue is, would these growth rates remain in the medium term or even grow? Because if you look at the number of employed in every branch and average salaries, it in fact does not tell you that there is need for any capacity building here. On the other hand, there are certain signals, like the data centers being built recently with significant investments. So there are some initiatives that might contribute to risks going upwards.
Turning to the industry, although in terms of the broader data, the published statistics, although in Q3 it is entering a positive domain, or even Q2, but year on year the growth is rather modest. But the main contributor here, obviously, is base metals, jewelry subsectors, which bear the effect of the re-exports. If we were to net those out, the growth is within a healthy long-term predicted growth range of around 4 to 6% in the last quarters. And in terms of the prospect, and we look at imports of capital goods quantitatively and value-wise, there's a 6% value-wise growth year-on-year in the first half. There's an 8% growth in terms of the volume, and the lending rate is also high and growing, so there are some medium-term impulses for increasing capacity. But with this accelerating growth in the recent past, it's mostly driven by the expansionary demand and somewhat growing demand in some sectors. And if you look at domestic demand and external demand, within the domestic economy, although there are some impulses that perhaps domestic demand could be high when you look at lending growth, such as consumer loans, mortgages, which expectedly have a downward trend but remain high. The high interest rates on loans, these factors could be indicative of a domestic high demand environment. But on the other hand, when we look at final consumption goods, the pace remains pretty much unchanged. But if you talk about the risks, there are some risks that could expand domestic demand, such as savings. Private savings here remain quite high post-COVID compared to the levels that we had historically, around 20%. Currently there's a 2 to 3 percentage point higher level. So with these savings that built up, getting invested or consumed in the economy, the domestic demand environment could continue to rise, to expand. But on this side again, when you look at the inflationary context to understand the position of demand in the economy, the non-tradable rigid prices index, which is quite a good indicator of the demand environment, the inflationary expectations, it remains slightly below target. 2.5% is the range. And as to external demand, it was really the main factor in recent months of our economic growth or activity somewhat speeding up. So we were seeing clearly positive impulses here, with external demand expanding or speeding up. One of the factors was tourism. We can see this on the left-hand side chart, that in 2025, since May, June, July and August, tourism really sped up. Although in the first part, year on year, there was an around 10% decline in the first 4 months, then it considerably sped up. We had quite a large influx in these months. On this left-hand side chart, you'll see the lines. That grey line is 2024, so it's high growth compared to 2024. In July, we came close to the 23 maximum, several thousand people higher. And in terms of the structure of tourism, in the first 4 months of the year, mostly Russian tourists, whose number declined relative to the previous year, that they recovered in the next 4 months. And for tourists arriving from other third countries, they remain the main source of growth in tourism. The external high demand is also seen in commodity exports, not just exports of services. We're looking at the growth of the IT sector. We're seeing GDP growing faster and some financial services growing fast, and their share increasing. That's on services. On the other hand, for commodity exports or processing industry, especially tobacco, processed foods, and the like. And for the rest of it, at least maintaining the post-2022 high levels with some fluctuations. So if this part were to be concluded, this growth speeding up story, the speeding up of growth we're seeing in, especially in Q2, continuing in Q3 as well, there is a supply-driven component as demonstrated, but especially a demand-driven acceleration, which is mostly due to external demand growing. The speeding up of demand. As to fiscal demand, risks are on both sides. In terms of the general impact of fiscal policy, for 25 it's this black line on the left-hand side. It's the total budget for 2025 planned. We estimate it has an impact of about 1% if fully executed. But there are risks upwards and downwards. The upwards risks can lead to fiscal revenues somehow being under-collected. Although we see at the beginning of the year tax collection going at quite a good pace, and there's an impact of administration. But there were some one-off factors, and they can also be neutralized during the rest of the year. And the fiscal plan for the year might be somewhat under-collected. On the other hand, if the expenditures are fully executed, we will have a greater inflationary impact from the fiscal side. We also see the risks of under-execution of capital expenditures, which is also subject to our capacity and whether in the economy and in management there is capacity to, in governance there is capacity to spend 7% of GDP in capital expenditures. That's about 700 billion drams. If you look at the capital spending, execution rates are quite high compared to previous years. But again, one-off effects that could be neutralized there. Under these circumstances, we could have a weaker stimulus if CapEx execution is close to past trend and not 100% as budgeted. Therefore, we will have a somewhat weaker fiscal policy stimulus. Is that yellow line, 0.6. But there is also another specificity here. In CapEx, we have some expenditures that for imports of certain goods, which could have a not great impact on demand, since there's uncertainty about the magnitude of the impact. Say a certain amount of capex executed, what will be their economic impact? And under the other scenario, a large part of the expenditures are for imports, capital imports of goods or imports of capital goods, and the economic effect will be smaller, around close to zero. So it could be a neutral budget. After all, in the labor market, what we see is that recently the misbalance has improved, the supply-demand misbalance. We see wages, average wages generally
միջակայքում եւս ճյուղերի էլ այդ մեծ տարբերությունները բաները բավականին
The big differences between the sectors are really
այստեղ կարելի
shrunk.
ասել որ աշխատանքի շուկան
So you see the labor market
դինամիկան ինքը գնալով ավելի կայունանում է
is becoming increasingly more stable.
գնաճային ոչ գնանկումային
So we have not inflationary or deflationary significant impacts.
արդյունքում գնաճը վերջին
As a result,
շրջանում չնայած փոքր-ինչ
although inflation has recently sped up a bit,
իրական սկզբից,
right from the beginning of the year we
գնաճը արագանում էր,
we saw inflation was speeding up. There were two stories. One, beginning of the year, first 3 or 4 months, the seasonal agriculture produce effect, supply factors, but of that type, especially potatoes, which were neutralized. And in the last few months especially, and also from the beginning of the year, it's imported foodstuffs. As I said in the beginning, we have about 7% growth worldwide for foodstuffs, and in Armenia, imported foodstuffs are around 6% growth year on year, so that growth is also roughly comparable. The prices of imported foodstuffs have mostly been absorbed by the Armenian economy. And inflation is around 3.6% as of August. But on the other hand, no, I'm sorry, normal inflation, natural inflation is, regular inflation is about 3.7%, mostly due to imported foodstuffs, non-seasonal foodstuffs. But on the other hand, when we look at these supply factors and try to net them out to see what is due to demand or expectations, where is that inflation? The rigid prices index is around 2%, 2.5%. And our inflation, net of food and fuel, is around 2.7%. So between 2 and 3. But naturally, for this part, discussion of what would be the impact of imported products. And these are the inflationary expectations. In the context of all this, we see that in accordance with our latest surveys on inflationary expectations, the high inflationary expectation respondents' share continued to decline. There was a certain increase in the low inflation, in the share of those having low inflationary expectations, but less than the decline of those having high inflation expectations. So as a result, the uncertainty grew. We see that the high inflation expectation, or the share of it in the last grows in the last 2 or 3, declines in the last 2 years, and comparing it to other inflationary indicators such as growth in private wages and non-tradable rigid price index, you can make a qualitative assessment that our inflationary expectations continue to decline. And they're pretty close to our targets. So the economic position, or position of the economy, the GDP gap is possibly somewhat positive, close to neutral.
տիրույթում այս վերջին
or in
շրջանում
a positive range,
արագանալով ըստ էության արտացոլելով այդ
somewhat speeding up, reflecting external
արտաքին պահանջարկի միջավայրի ընդլայնումը
the expansion in the external demand.
քաղաքականության դիրքի տեսանկյունից որ չեզոք տոկոսների բաների շուրջ այդտեղ պետքա հատկապես նշել, որ այդտեղ
It has to be pointed out here
բավականին մեծ է
there's quite
չեզոք տոկոսադրույքի մակարդակի շուրջ
some uncertainty.
գրաֆիկում դուք նայեք
If you look on the left hand side,
ինքը ըստ էության կապույտ գիծն է
it's the blue line,
չեզոք
the estimate
բայց այն
of the neutral interest rate,
հատվածն էլ իր շուրջ անորոշությունն է, հա, թե ինչքան է մոտավորապես ինքը իլյուստրատիվ
but it's an illustrative
նկարած
band.
բայց ինչն է այդտեղ կարևոր
But what is important there,
բոլոր կոմպոնենտների մասով անորոշությունը բավականին բարձր է
but for all components, uncertainty is high,
չեզոք տոկոսադրույքի շուրջ անորոշությունն է
and
բարձր
it's uncertainty for the interest rate
երկրի ռիսկ հավելավճարի
or the country risk premium
մակարդակի շուրջ անորոշությունն է բարձր թե իրական փոխարժեքի տրենդային արժեվորման
the real
շուրջ անորոշությունն է բարձր
exchange rate trend of appreciation,
հնայի պոտենցիալ աճի
which is due to our potential GDP growth uncertainty
շուրջ անորոշությունը
and the inflation expectation uncertainty.
Բայց ստեղ ելնելով նաև այս մյուս կողմից, հա, նորից այլ որակական
But looking on this other side, the qualitative assessments,
զարգացումներից թե աճի եւ այլն
inflationary developments and growth,
որ քաղաքականության դիրքը
one can assume that the policy position is quite close to neutral,
կարող են գնալ բաները
but the estimates can be different.
Մյուս մեր էական
Our next
մյուս կարևոր տնտեսական դիրքի վերաբերյալ
important thing about important assessment, the important indicator for the position of the economy is the real effective exchange rate position.
Նորից իր շուրջել նորից վերջի տարիներին հատկապես այդտեղ նշում ենք որ
And we're mentioning here that in recent years there's quite high uncertainty for where it stands. The real exchange rate somewhat depreciated because of the appreciation of exchange rates of the partners, euro and the ruble. So our position here is close to being closed. But again, there's the other story here. What if this recent high economic growth was due to the more productive sectors, and we have a scenario for this which I'll present, which could lead to a higher trend of appreciation, the blue dotted, the blue curve.
Որոշակյոն արժեզրկված ավելի դիրք ունենք, քան հակառակև մյուս կողմից այստեղ տեսնում ենք շուկայի սպասումները աճ կողմում
We see the market expectations here on the right hand side.
Ձեզանից ստացված ստեցան բաները
And you see that there are the estimates that we received from you.
Ձեր մոդել անորոշությունը ինչքան
And you
մեծ
see how high the uncertainty is for you.
անվանական փոխարժեքի
For the nominal exchange rate especially.
այստեղ թե բանի դիապազոնի մասով
It's about the range to 370 to 450 in the next 3 years.
մեդիանը բավականին
And the median is quite slowly depreciating. So that's the summary of the market's expectations. Now going to more broadly to your expectations, as far as we've understood you, and your expectations of the economy. Our financial markets expect roughly this. That economic growth is or will be close to its long-term stable or sustainable level. There are no major gaps. And then our inflation after this current trend will stabilize around 3-4%, stay around that horizon, and then markets expect that the central bank will gradually reduce the policy exchange rate to 6.5%. 25%
Ըստեյության սա
at the end of the
ձեր
horizon.
սցենարն է, որը վերջին մի քանի
And that's your scenario,
եղեցեկների ընթացքում չի փոխվել,
which hasn't changed in the last few quarters.
երևի բան կանենք։ Կանադառնա կարճ հարցումների արդյունքները մոտապես
Briefly, the
նման
results of the surveys.
Իմ ներկայացրած բանը այս կարճ հարցումները դիլերների շրջանում
The short surveys among dealers
տոկոսադրույքի որոշումներից
for
առաջ
before
եւ հետո
the interest rate decisions and
հասկանանք
after to understand
ինչ ազդեցություն ունեցան այդ առաջ
to understand what was the impact
դրա վրա էլի
uh,
իրենք էլ եւս
on
արտացոլում են
the interest rates after the survey,
25 աստիճանական իջեցնելու
and they're showing the trajectory of the policy of gradual reduction to 6.25.
ինչ որ առումով
They were pretty much the same.
կենտրոնական բանկի կոմունիկացրած վերջի երկու նիստերի ընթացքում ավելի ատիպ
In spite of the A-type risks build-up communicated by the central bank in the recent board sessions.
Եկամտաբերության կորի
As to the yield curve,
մենք նայում ենք
when we look at the yield curve,
նախորդ որոշումից հետո
after our last decision,
չկա
there's no significant
համադրելի այս կողմից
shift,
քաղաքականության տոկոսադրույքի վերաբերյալ
Probably.
սպասումների
comparable to the policy rate expectations on this side. As to our scenarios, this is really our most important bit. The scenarios which reflect the concerns of the board members, they're of a narrative type, and they reflect upwards and downwards of the market's expectations, the potential risks, and they might react a policy response relative to the market's expectations, upwards or downwards. The more inflationary or A-type, as we call it, scenarios that require a higher trajectory relative to the policy. That's A-type scenarios. I'll go over them briefly because they're in our report in greater detail, and the presentation is also published, so I'll quickly go over them. One of them is America's fiscal policy and its possible impact. If the budget is more expansionary than expected, then it can drive up the neutral interest rates, which can have a significant impact for developing countries, including Armenia. The other risks that exist. For Russia, we have some scenarios. The Russian-Ukrainian conflict negotiations and the backdrop of those. Sanctions becoming tighter or additional sanctions being imposed. Risks thereof. They could serve as a source for greater capital inflows by expanding domestic demand. Inflationary impact of the international food markets in Armenia. For monetary policy, it doesn't have great significance unless there's supply-driven inflation. There's not a basis for higher inflationary expectations. So this scenario is about that maybe some commodities could influence the inflationary expectations, leading to an undesired increase in inflationary expectations. The next one, the regional geopolitical tension declining, greater influx that could influence the demand environment. The next category of factors or scenarios have to do with our domestic demand environment. So there are factors which could indicate, for instance, that the persisting strong growth or growth above the potential line and its structure, as we're seeing that it could be in the sectors driven by growing demand. It could be indicative of the fact that maybe the demand environment is high. There are factors that could additionally contribute to a growing demand environment. For instance, the savings that were built up, as I was showing, or the more expansion or more of a fiscal stimulus or external demand in tourism, for instance, if tourism continues to grow. This could also be a factor for expanding demand. For the A-type scenarios, limited supply scenarios exist. For instance, global trade policies becoming tighter, and when we say the supply value chains are significantly changing around the world, global trade is changing, the chains are being reshaped, and they could have somewhat of an inflationary impact on the global economy overall, and our economy too. For the B-type scenarios, one of the B-type scenarios is weakening of external demand in the EU and China, for instance. One scenario is for weakening of the American economy. If this high uncertainty continues, it may lead to a crisis of trust, and there are risks of a much sharper decline, the US economy weakening faster. And one that we had as an illustrative scenario for the last presentation was that in recent years, in our economy, especially in certain branches of the economy, quite high liabilities, loan and debt have built up, and with weakening global demand, they could be an additional restrictive factor, and in a non-linear way hold our economy back more. And the other scenario, or the other factor, having to do with construction. Although these were mitigated, as I said, but they survived these risks. There would be a normal, natural adjustment. Construction and the related sectors of the economy could weaken faster and not proportionately with the overall demand environment in the economy. And then, as I said, on the A side, the reverse mirror scenario, as we said about the fiscal already, that it could be less of a stimulus or even a contractionary impact on demands, increases in certain taxes in the economy, and the tax administration becoming more stringent, that could influence investments in the environment and weaken the demand environment. And the neutral, regarding there's uncertainty over neutral interest rates on the other side, where we said there are some factors that could indicate that the neutral is higher or maybe growing, and factors which might indicate that a neutral interest rate could be much lower here than I indicated there in the beginning. So, for instance, in recent years, high growth, which was accompanied with, especially with the creation of some production capacity, such as in financial services, investment services, and the like. These branches emerged that are growing at quite a fast pace, as well as IT, the processing industry,
այդ աճերը
these growths and their growing shares, the growth, strong good prospects in these sectors could be indicative of us having had higher potential growth in the economy in recent years, and more generally in our longer term growth potential is now higher than we think, which, and this is all described in literature, in developing countries especially, it indicates that it's influencing the appreciation trend of the real exchange rate. The real exchange rate appreciation trend is much higher. Other conditions are equal because investors are getting income from the exchange rate. They could demand a lower interest rate for investing there. So the neutral being less, the neutral exchange rate is then lower. And the other component of this part, that the regional geopolitical tension affecting us becoming weaker could affect the risk premium, and so for that part drive the neutral down. And thus the another category of supply factors, other scenarios such as labor migration towards Russia declining. On the one hand, we have high uncertainty over the prospect of economic growth in Russia. On the other hand, tougher migration policies on the part of Russia that could result in migration to Russia declining or people returning, which in our labor market could grow or increase the supply of the labor force, which could create more of a deflationary trend in the economy. So moving to this policy cycle, presenting our two illustrative scenarios. As you know, every time we do one A-type illustrative scenario and one B-type illustrative scenario. Our A-type illustrative scenario is really one of growing external demand. We're seeing the tourism flows to Armenia grow. And we're seeing the impact, especially in the inflation for certain services, such as restaurants, cafes, restaurants, hotels, and so on. Also seeing for commodity exports, high demand. The next component is remittances from Russia to Armenia by our labor migrants. Money sent to Armenia, money remitted to Armenia. All of this being indicative of an external demand shock or that trend. So how is this important for monetary policy? As you know, the natural absorber for external demand shock is the appreciation of the exchange rate, which with this scenario, this environment, should naturally occur. So the main task of monetary policy here remains that, especially, as I said, under the influence of external demand, the prices of certain services could respond more swiftly, such as hotels, restaurants, and the like. The role of monetary policy is to anchor inflationary expectations, to not allow, with such a shock or such a scenario, for certain groups
ազդի ընդհանուր
to that have inflation influencing the overall inflationary expectations and causing them to speed up. And you will see in this scenario that external demand absorption, or the main absorping factor or the variable for external demand, is the exchange rate. Left hand side lower, see the effective exchange rate depreciates significantly under this scenario with this shock. Monetary policy having a somewhat higher trajectory than the market's expectations to anchor or to not allow the inflationary expectations to speed up at an unwanted rate, and our rigid price index also speeding up to an extent and then gradually going back to the target range. Our next scenario, as I told you already, is the lower neutral interest rate scenario, where we could see in recent years, this is the motivational part that I presented in quite some detail in the scenario already, so I'll go quickly over this. And why this is necessary for monetary policy. That in this situation, if the neutral interest rates are quite lower than we estimate or that we have in mind, it means that other conditions equal now or in recent years, monetary policy may have been more of a contractionary factor. So if you see here, it implies that monetary policy, that the policy interest rate first has to decline fast. This is the new reality of our economy, which is the higher productivity in the economy. To reflect this reality, then monetary policy, the policy rates have to be adjusted and the position has to be adjusted downwards. Then we would remain within that range. That's probably all. And in conclusion, I'll say this is our presentation. If you have any questions, I'll be very happy to answer.
Շնորհակալություն Ալեք Սարգսյան,
Thank you, Alex Sarksan, Commerzbank.
Եվ թեմայի շրջանակներում եւ
On this topic and slightly beyond, I have a question.
3 երամսյակ է որ
It's now 3 quarters that the CBA changed the inflation target from 4% to 3%. I wonder if you have some surveys already among the different sectors of the economy, the financial sector, for instance. You can see from our surveys, or other surveys, or what is it that society generally, what is this change among professional circles or not so professional circles? Is it being understood? Because among our financial sector participants, I'm seeing that the long-term expectations of inflation, at least 7 or 8 participants of the market expect around 3.5% or somewhat longer still in the long run, let alone the other sectors. So I'm trying to understand to what extent the change in this target is close to society's expectations, or has it changed the expectations of the public? It'd be interesting to also compare this to the fact that although the high inflation expectation is declining, but it's mostly due to uncertainty in the inflationary expectation and not due to low inflation. So there may also be a link with this. Thank you. Thank you. Dear Arek, that's a great question. I can turn to your first question, or the first part of your question first, and then turn to the second final part. That way we divide the questions. Firstly, yes, you have a number of options here to understand the inflationary expectations and what they are, what's their level. Unfortunately, we don't have deep options markets or the like in our economy to be able to understand from based on them what the expectation is. So we're looking at the yield curve trends, how much it changes, or the second important thing, as you said, our financial market participants surveys to the yield curve, especially the longer parts, relative to the beginning of the year, we see a certain decline. It's not 1%, obviously. We can say there's anything in it, but there are quite a lot of factors around the world and factors typical of Armenia are coming from the global economy, which influence the long-term interest rates. And so to filter out all these and to understand whether it's really, what is the actual part due to inflationary expectations would be hard. There were upwards and downwards components. So when you do the more explicit results of the surveys, or you look at the results of the surveys in the financial system, you're right that there's disproportion, by the banks. If you compare to the end of last year, we now have 2 or 3 quarters data already. If I remember correctly, the first survey that we conducted at the end of the 3-year horizon was about 3.4, the median for the inflationary expectations in the financial system. Our next survey showed around 3.2. With the current survey, it's around 3.1. So at the end of the horizon is actually even 3. On this side, we're seeing that maybe by banks, and this may be normal, different banks, depending also on the credibility of the central bank and things like that, how fast will they adjust our inflationary expectations to our new target. It's normal, but we see the positive trend. And that's also your question about the financial markets, which brings us to closer to 3%. As to the surveys, yes, that is the case. The high inflation expectations and the smaller percentage of those who have those expectations with greater uncertainty. But that's fine too, perhaps, because how do these things happen? I mean, imagine you're talking about one person or 10 people, certain people. If they expect high inflation, either they go down immediately to low inflation expectation, which is not very likely, but for some periods, after having a high inflation expectation, they may come down to uncertainty. They don't know if it's this side or that side, then other factors prevailing, and then they would move to low inflation expectation. So this decline is roughly about that. Become uncertainty and then move to low inflation expectation. If you allow me, just to add briefly, although my colleague really presented most of the fundamentals, just one more comment. Rising, if we discussed rising uncertainty, and where's the neutral? They're in the slides, and Vazgen kept repeating. This is actually in the slides, but the second point I wanted to bring to your attention, in defense of that point, let's not forget, our target is 3%, but it says plus minus 1%, the tolerance band. Owing to that, maybe if we change our hats, we could say they're predicting that within that tolerance band, it will be within that tolerance band. And the final comment, methodologically, it was mentioned that it's more effective to rely on the actual data. The inflation expectation surveys, not all respondents actually know that the target when they answer the questions. This could create some white noise in the data. Thank you, Ignat Fraga. Sequatra Tampega. My question is on the market participants the results of their surveys and their expectations regarding the CBA's interest rates. In the last 5 board sessions, interest rate was unchanged. Perhaps in the last 3, there was an A-type scenario observed, but the market participants are still, in a way, expecting a decline. As the central bank tried to understand, because these are mostly banks, is the problem really about being more inert, or are the banks really standing closer to the real economy, so they feel the pulse better? Maybe that's why there are some differences between the board's perceptions and the banking system's perceptions of where the economy stands. And Mr. Artak Manukyan has come today, so I will ask you to tell us, in the last board session, you were in favor of a 0.25 increase, and this time you voted to leave it unchanged. What has changed? What are the few key variables that caused you to change your decision? Thank you. Go ahead, fine. Mr. Frangian, it's that question that you asked, and it's very, very good that you're the one asking that question, because we keep discussing this ourselves, and we talk about this all the time. We're relying on the starting point that it's not to the inertia of the respondents or the banks continuing to maintain it, about which there are some concerns, but that maybe you're closer to the pulse and you have a better understanding and you understand better what happens. But there are 2 very important things here. While I have this opportunity, since within this new framework of ours, our financial system plays a much more important role, and the market reference. So I would ask you, even though there are parts that you're filling in, but then saying why A-type, B-type risks, or the overall scenario described. For some time we're seeing that there is inertia there. We will ask you to give us as much information as possible about the scenarios and why you're thinking that and why it's happening like that. I can assure you that all your inputs are very, very helpful to us. They're very important for our common cause to much better understand the market's expectations. Because again, on the left-hand side chart, there's a great dispersion of the expectations. When the dispersion is so great, and it's not centralized in one place, the median remains the median, but it's probably not as representative as otherwise. But again, that's the starting point, that you have a better idea of what's going on, not the other side. But the more information you give us, the more you help us, the better we will all do. Should I respond? Thank you for reading. But the second thing, a bit of methodology, because I represent the spirit of the discussion in the board, and our principle is that any member, that if they vote or share certain risks, they cannot speak about it more. They should speak to the scenarios discussed in the board, and if you read the press release, you will see that they're mostly the A-type scenarios that are being discussed. Their likelihood has grown, contrary to that the B-type scenarios, such as real estate and the like, have declined. But so that I'm not completely avoiding. Of course, I'm ready to speak about this in greater detail in the future, but to be brief, if you look at my vote, there are some changes in it too. And since we're all governed by the concept of reasonable risk governance, trying to, if you will, minimize risks or regrets. The risks of this time period, which I personally could see were there, and they've gradually declined. They're implied in the curves. That's one possible answer, and I will cover the rest. Thank you. Other questions? Shall we conclude then? If there are no further questions, thank you. Especially to those who read.